Hi, I'm Tom Lydon here in San Diego at the Charles Schwab IMPACT Conference here with Ed Rosenberg, head of ETFs for American Century. Great seeing you, Ed.
Thanks for having me, Tom.
Well, you've been busy. There's a lot going on in active semi-transparent. First of all, talk about what's going on in that space, and then we're going to talk specifically about what you've got coming.
Yeah, so what I would say is you've got the SEC has granted exemptive relief, at least for us and potentially others, on the ActiveShares product. So we have registrations already out there. And then the third legal document that's out there is the 19B4, which exchanges have to file on your behalf through trading and markets for permission to exchange. So that is coming, right? Ours expires next year in February, but we think we're going to hear something this year, potentially by the end of this month. And others, by the way, who are just behind us are in that same boat. So that's been approved. Then you've got what you would call the proxy basket structures, whether it's NYSE, Fidelity, T. Rowe, all of those types of structures. They are currently with the SEC waiting to be noticed so they can go through their approval process.
Okay. So I'm going to translate that for those that may be hearing that for the first time. So a company called Precidian has an approved technology, let's say, that you're going to adopt to be able to bring some active ETFs to market.
Absolutely.
Where they the underlying will not be disclosed daily, but on a quarterly basis. Is that correct?
Correct. Well, it depends on your companies. If you have a company that does monthly, you would disclose it then, but we are quarterly, so we would disclose it quarterly, yes.
Okay. And then that might come to market early next year?
So there's an opportunity for it to come potentially this year, although the odds are a little less, but I would suspect it'll be very early next year.
So the advantages for a company like American Century is you've been in the mutual fund business for decades.
Yes.
You've got loyal clients that love your funds, but they're coming and asking for, can we do the same thing in an ETF wrapper?
Correct. I mean, if you think about it, the ETF is just a wrapper, right?
Yeah.
Just like an SMA or a mutual fund. There are clients who prefer different structures, right? And as time's gone on, clients have preferred more and more an ETF structure. But as American Century, we've only had ETFs for a little less than 2 years. Yeah. And so clients want our ideas in a structure that they want, which is ETFs. But in today's world with index and transparent active, we can't bring forth the ideas that they want because we think there's opportunities for front running or free riding, whatever you want to look at, but or even copying, by disclosing the holdings, it can impact the alpha potential of that portfolio.
Absolutely, because even if it's new and it's small, if you show what's going on every day, the ideas are happening with this big mutual fund that's being managed over here, correct?
Yeah. And now it doesn't mean we're going to copy those funds. Yeah. You could do subsidiaries, you could do something totally brand new, or you may do a clone. Right. Everything depends, right, on what we're trying to bring forth and what our portfolio managers actually are comfortable with.
Well, it's a natural evolution of the ETF space. I know you're excited about it. Absolutely. You guys are at the front of the pack as far as bringing products to market. So best of luck, and I know we'll be in close touch.
Thank you.
Thank you.